Meme stocks like GameStop and AMC Entertainment are taking investors on a wild ride right now. Those fortunate enough to get the timing right have seen returns in the hundreds to thousands of percent in just a few weeks, or days in certain cases. But this upside comes at great risk. So if you're looking to get a quick understanding of what's going on in the meme stock movement, then keep watching. Hi folks, I'm Taggart, founder of Wealthion, and back with another short explainer video on a topic many of you have requested, meme stocks, which are dominating the headlines across financial media these days. But before I start, I just want to say a quick thanks for the amazing support of all of those watching. You've helped us take this new Wealthion YouTube channel from 0 subscribers at our start in April to over 30,000 as of this recording in mid-June. That's amazing, and I am truly grateful to all of those who have subscribed. If you haven't subscribed yet, please just take a second to do so now by clicking on the subscribe button below, as well as that little bell icon right next to it. Because the more subscribers we have on this channel, the bigger the experts I'm able to attract as interview guests on this program. All right, so what are meme stocks and who are they appropriate for? Here's my best shot at explaining them in under 10 minutes. The meme stock movement is a brand new phenomenon, just getting its explosive start early this year. It operates as a hive collective, mostly made up of small retail investors, many of them in the millennial and Gen Z generations. The group collaboratively shares ideas, strategies, and encouragement within social media communities, the most famous of which is the Reddit subgroup wallstreetbets. Now, when the collective identifies a company that it judges to be an appealing target, its members start piling into the stock, often causing it to surge higher. This then attracts other buyers hoping to ride the momentum, pushing the stock price higher still. Meme investors often target companies that are heavily shorted by institutions like hedge funds. This is a game of chicken, where the meme army is hoping to drive the stock price so high that the hedge funds are forced to cover their shorts, which basically means the hedge funds have to buy back the stock at these higher prices, which in turn adds even more buying pressure and often pushes the stock price up even higher. Now, when it plays out like this, the meme stock investors who bought in early can make staggering returns. For example, let's look at the most famous meme stock so far, GameStop. Back in 2020, GameStop's stock price was languishing in the $4 a share range. When the Wall Street Bets army made its first raid into the stock early this year, it rocketed up to a price of $483 a share on January 28th, a mind-blowing 12,000 year-over-year increase. Other stocks targeted by the meme collective like AMC Entertainment, Blackberry, Clover Health, and Nokia have seen wild, sudden, triple-digit or more price increases as well. With apparent fortunes being made when meme investors swarm into stocks, many people watching from the sidelines are asking, am I missing out on easy gains? Should meme stocks be a part of my portfolio? And that's an understandable question, especially by those skeptical of today's highly elevated market valuations, yet who every month watch asset prices continue even higher, with the meme stocks often leading the charge. FOMO, the emotion-driven fear of missing out, is very powerful right now. Now, look, none of what I'm about to say is intended as personal financial advice, but I am confident saying that meme stocks are most definitely not appropriate for everyone. They are highly volatile and highly risky. All right, let's first talk about their advantages. First, they offer potential huge upside. As mentioned, these stocks can double, triple, or more in a matter of weeks. If you're one of the lucky investors to get in ahead of the rest of the hive and manage to sell out near the top, you can make a ridiculous return. Second, the collective power of meme stock investors is helping to level the playing field a little bit for the average small investor. The big institutions who have long been complacent to use their size, cost, information, and technology advantages to abuse and push around retail investors now suddenly face a new player on the field who can push back with force. This isn't that dissimilar from how unions were created to give once powerless workers a means of keeping corporate power in check. So if you're for a fairer balance of power in the financial markets, you may find the meme stock movement inspiring. All right, third, it's no mystery why many meme stock investors are millennial or even younger. Today's cost of living is so high, as are the prices of key lifestyle assets like cars, college, and homes, that many people under 40 doubt that they'll ever be able to secure a middle-class lifestyle unless they score a massive win in the markets. So it's little surprise that, along with the similarly extremely volatile cryptocurrencies, many of these folks are pinning their hopes on meme stocks to be their ticket to financial security. Okay, now let's look at the downsides. First, meme stocks are crazy volatile, and there's no guarantee that the strategy of the collective's long investors overpowering the institutional short sellers is going to work for any given stock. So if you buy in, you need to be eyes wide open that the odds are dangerously high that the price could be a lot lower when you go to sell it. Second, while some of the factors that have enabled the meme stock army will persist, like Robinhood opening stock investing up to millions of new investors and facilitating social collective action, some of those factors will not. Let's take, for example, the billions of dollars in stimulus checks, stimmies, that have funded many of those new Robinhood accounts. As I covered in another explainer video 2 weeks ago, political support for future such checks has dried up, and now half of the states in America are ending pandemic unemployment payments sooner than the federal government's Labor Day deadline. There's suddenly going to be less ready funding for the meme stock army. Third, most of those participating in a meme stock raid are making an emotional decision versus an empirical one. Few really take the time to understand the underlying fundamentals. Instead, many of them confuse momentum for sustainable value. They buy because the stock is going up, and they believe it will go higher, which indeed it may. But let's say a meme stock does quintuple. Can it remain at that new higher price? The scant data we have so far in 2021 indicates the answer is most often no. Explosive ramps upward in price are followed by equally violent declines. So what happens is that the majority of meme stock investors, the ones who didn't buy in right at the beginning, but bought in somewhere along the meteoric rise, they lose money. Many of them lose a lot of the money that they put in. And for many of these investors, a lot of them younger and with less capital, they take on losses that they neither expected nor can afford. Remember how GameStop hit an intraday high of $483 a share on January 28th? By February 18th, just 15 trading days later, it was back to $40 a share. Pretty much everyone who bought in as the stock was making its meteoric rise was sitting on losses by mid-February. So it's important to remember that a suddenly higher stock price doesn't necessarily mean the underlying company's prospects have suddenly gotten any better. The bottom line is we don't have evidence that meme stock price surges last. As to whether or not meme stocks make sense in your portfolio, of course, the best person to answer this question is a professional financial advisor who knows you, your unique financial situation, your risk tolerance, and wealth goals. But here's my perspective. If you are a current investor in meme stocks, congratulations, you are made of braver stuff than I. But in all seriousness, if you hold any kind of substantial position in meme stocks, especially if you are sitting on gains, you should consider strategies for hedging your downside risk. Given the extreme volatility of these stocks, as well as their demonstrated tendency to revert to their pre-meme levels, the longer you hold on to your position, the higher the risk of it falling in price on you. Now, there are financial advisors experienced in using a wide arsenal of tools, stops, put options, option callers, just to name a few, that can materially limit your downside risk without sacrificing an unacceptable amount of your upside. And for those not currently invested in meme stocks, realize that most of you shouldn't be. Unless you have a strong appetite for high risk and have money to burn, just be content watching the crazy action from the sidelines and sleep easy. But if you've got discretionary wealth and an iron constitution, adding a small slice of swing for the fences meme stocks to your portfolio could make sense, especially if it increases your diversification to additional sectors. If this sounds at all like you, I have two strong bits of advice. Number one, only put money into meme stocks that you can afford to lose, given how risky they are. And just so you know I'm not being unfairly biased against the meme movement, I give this exact same advice for those looking to invest in junior mining stocks. And number two, Given their volatility and how quickly the raids and squeezes undertaken by the meme collective start and then disappear, I highly recommend only buying and selling them through an experienced professional financial advisor who helps you clarify why you're buying the stock, can determine what a good price target to sell at is, and then monitor the stock as new developments transpire, which they definitely will. That may change your assumptions and require swift buy or sell decisions to be made. If you don't already have a quality advisor in place you can rely on to handle all of this for you, then schedule a free, no-commitment consultation with Wealthion's endorsed financial advisor by filling out the short form at Wealthion.com. They're extremely well experienced with strategies to limit your downside exposure on high-risk investments like these. If you'd like to talk with them, and again, it's free, simply just go to Wealthion.com and fill out the short form there. I think it only takes about 15 seconds to fill out. All right, folks, that concludes this quick explainer video on meme stocks. I hope you found it useful. Thanks for watching.